Listeners here, I'm filling in for Mindy. Let's talk about the futures markets. So there's a couple different approaches you can take. All right. You can trade anything and everything based upon a technical signal. And I wouldn't do that at first. What I would do is I would recommend, if I was starting over, I would start in one market and get really, really good at trading that one market. I would develop up maybe 3 setups that I would figure out that had given me an edge or a perceived edge, and I would get in the process of back testing that edge, and then I would forward test that edge by demo trading it, and then I would put actual cold hard money to work after that. Now, from that standpoint, you've got to figure out something that fits your trading psychology and your kind of makeup. All right, so I'm gonna give you a couple different markets that are moving higher, and I'll give you a couple that you may have never traded before. So gold, vertical move, looks like a monkey could trade this thing because all it's doing going up. Now, that looks deceptively easy. Gold is explosive. If you're on the right side of it, it'll rip your face off. But if you're on the right side of it, it is just euphoric, right? Because 58-point move today, that's $5,800 per contract. If you trade multiple contracts, that can add up really quick. Compare that to the NASDAQ, which is historically just a hard thing to trade, but a ton of day traders and futures traders trade this thing. It's in a solid uptrend, but the intraday moves on this thing is a little crazier than gold a lot of times. So you may want to trade something that's trending better, that you're not used to trading, and not just trade everything that everybody else is trading. Usually if it's a real crowded market, the smartest people in the world are trading that market. And then there's an old analogy, like people when there used to be pits in Chicago, and there's still pits, but there's just not a lot of people in them. And you'd have the corn pit, and then you'd have the S&P pit. Just think about the NASDAQ pit, because the biggest pit used to be the S&P 500 pit. After the corn market closed, because it had weird hours, you wouldn't stop trading corn as a professional trader in the corn pit and then go over to the S&P and go, hey, guys, what's going on? Can I trade with you all? They'd be like, dude, what are you doing? You're a corn trader. You're not an S&P trader. So I would focus on one market. I would only do 3 trade setups in that market until I got really effective and efficient of executing that, and then I would branch out to other stuff. What I like to do is try to find something that's trending and exploit the trend to my benefit. I like trading a lot of different stuff because that's kind of how I started out. I only started trading out a very few things at first in the futures markets. I'm going to give you a couple of other examples. You may have never traded feeder cattle or live cattle. Live cattle looking good to the high side, and also feeder cattle. As opposed to, the bonds are just now starting to shape up and look like they want to go higher, but lately they've been sideways and crazy and they've been broken. So focus on one thing and only 3 trades on that one thing. Get really effective of executing that. Stick to your daily loss limit, and then see how your setups go, and then track and document and journal everything. And then you want a feedback loop to learn as quick as you can. And the reason we're going to limit what you're trading is that's going to control the variables so that there's less stuff that you can mess up on. It'll also give you more runway. Your money will last longer, and it increases, in my opinion, your survivability. Good luck. Hope it helps. I'll see you on the next video.